Good morning. Welcome to the morning show of yours truly, Dex the Algo Capitalist. And I'm here alongside my main man, Frank. Frank, say what's up to the people.
Hey, what's up, everybody? Good morning. We were both answering as you to that question. It's funny. But John was just saying, "Hey, man, did you mention something about Bitcoin going to all-time highs a few weeks ago?" And then you said yes, and I said yes, you did. So, of course, we know that. Thanks for bringing it up, John. We appreciate it because you did bring that up. You've been right on top of this Bitcoin move, man, and congratulations to you because you nailed it from start to present. So, one of the things we're here for this morning is to find out what's next with it, my man.
Yeah, I know, man. People want to know. Inquiring minds would like to know. And basically, coming into today, um, we had a rally alert on the reports, and you saw that that did get triggered um, and on Sunday. So that's why the reports are so important because those reports come out before the Sunday night open at 6 p.m. Eastern Standard New York time. So if you were able to get your hands on those reports, you would have known that that was coming and to look out for that. So coming into today, very interesting things are happening. Um, and
And these
because
are
Bitcoin has been moving so hard, people have, gold and silver have gone virtually unnoticed, but they are moving and hitting new all-time highs as well. I can't say they, but gold is. Silver is trying to catch up, but gold has literally hit new all-time highs.
exciting stuff.
Silver has not hit all-time highs yet. So imagine how much room we have left for the silver rally because gold is already done it. Silver has not. So once silver takes out $50, then it's in the league with it's caught up to gold, and then they both can explode together.
Exciting.
So a lot of potential in these markets coming.
Very cool. Before we continue, I just wanted to let people know what you're looking at on the screen right now is part of the membership area of our site for Dex's Algo Capitalist bullpen. And the reports that he's talking about are our attack reports, the Algo Trigger Trend Attack Catcher. No. Algo Trigger Trend Alert Catcher. So
Nice.
it alerts you as to what's happening in the market and even predicts moves so that you can be in place to catch it. And that's the cool thing about the attack reports, the attack system, and your bullpen Dex is that it's not about you yelling out a trade, though you do that to help people when things form in the markets. It's about being prepared for what is already in the cards, most likely. And so we provide you with an incredible research tool that you could use for your own trading. It's worth its weight in gold, in our opinion. Do your own research, make your own decisions. Don't blame us if you make mistakes, and so on. That said, this is a powerful tool for traders. So check it out at pulsewavetrading.com. We have incredibly affordable memberships, and our yearly membership is really it's meant to be how anybody can get into it. If you're a person who has enough capital to trade with, then that's an incredibly which is not a lot, by the way. You don't need a ton. It's an incredible deal to get 1 year in the Algo Capitalist bullpen and then lifetime access to the not yet released Algo Capitalist letter and society, which is our tokenized Web3 community that we're building. And we're excited to show you that in coming weeks. But folks, head over there. If you're a member, you get to stay long and ask questions and see the order types placed and all that kind of stuff. And by the way, Dex did his job last night, and I didn't do mine. I got lost. I was supposed to repost his video. I apologize for that, folks. He's working hard, and I messed it up. So, but we're back on track today, and we've got everything you need. So if you got questions, get it in there. Also, join and check out our Discord. And last thing I'll say is our Discord is free, and anybody can go in there and hang out with us. The sort of the gold mine of stuff is in the membership. So if you want to be in our Discord, we're happy to hang out, ask questions, and tell you what our service is about. All right, back to you, my man.
Thank you. And look, I appreciate all the hard work you do, my brother. People don't understand all the hard work that goes on behind the scenes. So, if we have an off moment, we're entitled to it because we work like
I
dogs
love it,
behind the
man. Yeah.
scene. You know,
Like we try to be perfect, but this is really about getting up and doing it every day. And this is not just for us, but for traders. It's like it's not about the bad days you had. It's about you keep coming back and you keep doing it. So that wasn't a bad day. That was just I forgot because sometimes I forget stuff.
we are human.
We had file issues and stuff. So, but the point being, the whole thing about the Algo Capitalist bullpen is that we're here, we're doing it, and the reports are there. But not only that, you have cheerleaders and support when you're doing it. If you want to trade with us. So, all right, I'll stop being a commercial. I just love what we do.
Now, hey, I love your commercials, brother. Keep it going. Keep it coming.
Dude.
All right, folks. We got a lot, and I do mean a lot to discuss this morning. So this is what we're gonna do because we gotta give the people a chance. All right. So here, grab yourself a cup of coffee if you haven't already. If you're just getting up this morning, you got a late start, whatever, that's fine. But get a cup of coffee. Okay. Wash your face, all that stuff. When you splash water on your face when you get up in the morning, it does help you to wake up. And then, of course, that cup of coffee, you're going to need it because we have a lot to discuss. And whenever I say we have a lot to discuss, it means we have a lot to discuss. So I want to give you guys a chance to get ready. Now, these morning shows have taken on a life of themselves. Initially, it was designed just to go over the overnight quotes and to go over a few economic stories of the day that affects your markets and trading for the day. And that was pretty much it. It was never meant to be long-winded or even that deep. But lately, because of the interesting times that the United States is living in, I have been compelled to give you the real, the raw, the authentic. And there's just no way around it. I would be remiss and derelict in my duties if I did not discuss these things with you. So I have to give it to you the way it is because I'm going to be honest with you. And I don't mean to sound spooky, all right? But I don't know how much time we got left. And I mean that in the worst of ways, but I also mean it in the best of ways. So it's not all bad, but it's not necessarily all good either. You guys know I do a heck of a lot of research. You know this. Anyone who's followed me any length of time, I get it in. And sometimes when I just meditate on things, it comes to me certain things that may have been overlooked or things that you know about. You have the information, but you don't necessarily have the whole piece of the puzzle. And then all of a sudden, in meditation, it comes to you. Bam. This leads to that, which connects to that, which equals this. And it's just mind blowing when it comes to you like that. So without further ado, let's get into these overnight quotes. And then we're going to give it to you raw. All right. So, first things first, let me share my screen with you. We got the US dollar index trying to fight for its life. It's in the vortex. It dipped into the vortex, which is a no if you're going to maintain your current prevailing trend, which in this case, it's a rally mode, a correction mode, because the price action has been above the Algo Kumo cloud. But as of late, meaning Friday, the market dipped into that vortex. You never want to see that happen, but it happened. So now the rally in the US dollar is now in question. We're at the 102.89 handle. We're up 18 pips, but the dollar did hit 102.35. That's very low. That's the low 102 handle, meaning that it's going to need to really build a base right here, a springboard to bounce. Because if it doesn't, it's going to be a big problem. Now, here's the reason why I think that the dollar will be defended here. Because when you look at the markets now, you'll see that the euro is off 23 pips at 109.23, right? Just 2 pips off the overnight low of 109.21. The pound sterling is down 32 pips, right? Just 6 pips off the overnight low of 128.20. And the Aussie is down 25 pips, right? Just 1 pip off the overnight low of 66.01. All right. You really need to see the Aussie stay above 66, especially if it's going to benefit from the price action in the gold market. Those of you who have been with me for any length of time remember that I explained to you the commodity effect correlations between some of the currency pairs. For example, the Aussie is normally and historically correlated with gold futures. Okay. And then the Canadian dollar historically is correlated with the WTI crude oil futures. All right. Most people don't know these things. And then you have the euro yen, which is historically correlated with the S&P 500, NASDAQ, Dow, and S&P and Russell futures contracts. And we normally use the euro yen as the leader, which determines how the US stock market is going to go. All right. And it's been very useful and helpful in decades past of predicting and foretelling of changes in direction and trend, etc. So those are your three big commodity slash forex pairs. So rather than trading these futures contracts, you don't need a futures account. You can just trade the futures vicariously by trading Canadian dollar, Australian dollar, and euro yen. All right. So there you have it. Make a note of it. Write it down so you'll remember this. If you never knew that or never heard that before. And this goes all the way back, you guys, to the late 1990s. Okay. Not something that I made up or pulled out of the air. These are just factoids that those that know, know. Those that don't know, don't know. All right. So moving down the line here, we got the Bitcoin futures now up 2,495 points, trading at 72,300. Now, it did top out this morning at 73,215, but it also dropped to a low in the overnight markets of 67,520. It should be noted that these March contracts will be expiring shortly for the micro forex futures and the Bitcoin and Ethereum futures, and they will be rolling over to the June contracts. The Dow, S&P, NASDAQ, and Russell futures have already rolled over to the June contracts. It should also be noted that your stock index futures months, there are only 4 tradable contract months that correlate with the 4 quarters of the business cycle. And so your currencies are likewise correlated as far as those tradable contract months. And I believe the Bitcoin and Ethereum are designed that way too. Don't quote me on the Bitcoin and Ethereum. I have to double check it, but just go off the top of my head. I believe they're also correlated with the Forex and the stock index futures. All right, so the Ethereum futures are up 82 points at 4,069. All right, it did dip in the overnight low to 3,760. All right, these lows, overnight lows in Bitcoin and Ethereum, should be duly noted. Likewise, in the crude oil, it's down $1.08 a barrel this morning, trading at $76.93 per barrel. The nat gas is off 3 cents at $1.77. We have gold futures off 40 cents. I'll make that 90 cents, trading at $2,184.40 an ounce. And that's hovering above the overnight low of $2,181.20 an ounce. That too should be duly noted. Um, we were above 2,200, and so this radical pullback should be noted. The silver is also interesting this morning because right now it's down 2 pennies at $24.52. It did hit a high this morning of $24.71, and the low for the morning is $24.47. This should also be duly noted. Any type of a sign of a pullback coming into this morning should be seen as opportunities to get long these markets, not selling or shorting. Bitcoin, Ethereum, gold, silver, those four are not sellable markets coming into today. So if you were trying to pick a top in these four markets, you will probably get your fingers burned because the bullishness that is pent up is only going to allow these markets to be bid on every pullback. Likewise, the copper this morning is up a penny at $3.90. The Dow futures is down 204 points right now at 38,997. Now, this is another security where there is no bearishness or sell point in this market coming into today. So any pullback will be viewed as a buying opportunity for bulls to defend a certain intraday price inflection point low. Likewise, the S&P 500 down 30 points this morning at 5,162 and three quarters. Any kind of a pullback here also should be viewed as a buying opportunity. NASDAQ 100 down 124 and a half points at 18,170 even. Any pullback here will also be viewed as a buying opportunity. And then, of course, the Russell down 17.8 points at 2,091 and a half. Any pullback here also will be viewed as a buying opportunity. Why is that? Because of the amount of bullishness pent up in the market. There is nothing bearish in these markets. No negative bot checks, no crash alerts, nothing. Nothing negative in the algo charts or any other charts for that matter. The markets are not overbought. They're not oversold. They're locked in. All right. They have bullishness everywhere by every metric, by every measure that you can measure. So anyone trying to get short in these markets coming into this morning are in for a world of hurt. Now, I know it can be confusing at times because you'll look at these markets and they may have a bearish trend momentum reading, which is a contrary reading if it's in a bull market. So that's to be understood, and that can happen. But coming into today, these markets have corrected themselves. And yes, Bitcoin, Ethereum, Dow, S&P, NASDAQ, and Russell, along with gold and along with silver, had all of these markets now have bullish trend momentum readings. And if you're already in a bull market, that means you're in a locked in bull market. The market is locked in. A locked in market is a market where the only thing you're looking to do is go long the market. You're looking for buying opportunities on pullbacks. That's it. You're not looking to sell. You're not looking to short. You're not looking to build a short position. You're not looking to do any of that. The only time we do counter trend trading is when we get an alert. And so if we get a crash alert or if we get a bearish algo shift alert and you're already long the market when that happens, you don't just jump out of your long position. What you do is you'll tighten up your stop to equal the sell trigger on those alerts. And if you're hit, the first sign is, okay, that means I should not be long the market anymore from this step forward until these alerts play themselves out. And that's your opportunity, that if you get stopped out of your long position, to reverse and get short, all right, or step aside into the next buy signal. All right. That's how you play these. Anything else other than what I just described is a losing strategy. All right. And that's in the best of markets or even in the worst of times. All right. You have to be cognizant of these techniques and strategies if you want long term success. Yes, you can have drawdown periods, some of them can be painfully extensive. But if you stay the course, no matter how bad it looks or no matter how bad it is, the bounce back will blow you away because it's designed to give you the edge over time. It's not guaranteed instant overnight success. It's success over time. All right? Always remember that. That's why I always say in these videos that the system works only and if you work the system. All right? Because it's a fact. All right? Now, moving along, we have the soybean market today, pretty much quiet after last week's rollover. You're at $11.84 a bushel. Corn is down 3 cents at $4.36 a bushel, and wheat down 2 pennies at $5.35 a bushel. So that's our overnight snapshots. So now you see what the markets have been up to while you were sleeping. Here's what's going on as far as the news part. As you know, there's never a dull moment working as an assistant to a top hedge fund manager. So the hedge funds are in focus today, but not for the reason you think. Elon Musk's potential motivation behind pitching Tesla to take over OpenAI in 2018. Why are they talking about something that happened years ago? I have no idea. But investors got rich looting needy hospitals, and patients paid the price. We're going to talk about that and how that affects you and your bottom line. But first, our big story is about the Fed. They say every vote matters in elections, but the biggest decision in November's presidential race could be made outside the voting booth. That's right, outside. All right. So, what does that mean? Well, that's what we're going to talk about. For roughly a year, market watchers' top question has been when the Federal Reserve will cut interest rates. Now, the decision, which has massive economic implications, is now butting up against another monumental event, a U.S. presidential election. Now, the collision course puts an incredible amount of power in Fed Chair Jerome Powell's hands. What he chooses to do with interest rates could swing the election either way. It's been a long, strange trip for Powell as Fed chair, which is somewhat fitting for a long time communist. He's navigated two administrations, Trump and Biden, a global pandemic, and the highest inflation rate the country has seen in decades. Now, of course, the last issue is partly the Fed's fault. Most market experts believe the central bank waited too long to raise rates when the economy was booming. Perhaps that's why Powell has stuck to his tightening policy even last year as banks failed and experts predicted a recession was unavoidable. But now let's not get it twisted. Remember, everything that is going wrong and the reason why the economy has gone left is because of the decisions made during the pandemic. The pandemic didn't do anything to anybody as far as the markets or the economy is concerned. The thing that hurt markets and hurt the economy was the decisions that were made as a result of the pandemic. The decision to shut down the global economy. That's what killed the economy, not people getting sick. People getting sick had no bearing on the economy. It was the shutting down of the global economy. So again, either those that are in power, whether they be elected officials or unelected officials, either they're incompetent or they're just evil. And they did it on purpose, knowing what the results would be. But now Powell has the added pressure of sticking a soft landing. No easy task and not tipping the scales towards either candidate. Powell's rate cut decision is also complicated by not being straightforward. Lowering interest rates could be viewed as a win for President Joe Biden. It will provide an immediate boost to the economy and stock market, two things voters often judge a president on. But then the consequence of that is that every time in the past where they've lowered the rates, it always preceded a big dip in the financial markets after the initial rally. But every silver lining has a touch of gray, and a rate cut could send inflation soaring yet again, which would throw the economy for a loop and likely frustrate undecided voters. Again, that's the issue here. It's not just them cutting the interest rates. You can cut interest rates all you want, but if inflation is going to keep, going higher, that's going to kill whatever they try to do with the markets. Lower interest rates are a good thing for people looking to buy, especially houses and take out mortgages and things like that. But all that will be killed by rising inflation. There's a reason they took out food and energy from all of their calculations, because food and energy is the truth. All the other metrics are a lie and they are easily manipulated. You can't manipulate the cost of food and energy, though. Everybody knows what the sticker price is at the pump. Everybody knows what the sticker price is when they get to the cash register at their local grocery store. So food and energy, you can't lie about that. You can't tweak that. You can't massage those numbers because they are what they are. The cost of a loaf of bread at the store is the cost of a loaf of bread at the local store. You can't play around with that. You can try it. You can say, "Well, no, I'm only going to give you $4 instead of $5 for this loaf of bread," and you will be told, "Well, you need to put that piece of bread back or come up with another dollar." Well, no, you don't understand. According to the latest government reports, the loaf of bread is only really $24, not $25. It's not going to fly. If you try to walk out that store without paying the full price for that loaf of bread, you will be arrested for shoplifting. So how is it that the Fed is not being arrested for shoplifting when they massage these other metrics? Well, holding off on cuts, though, poses a risk too. The threat of a recession isn't entirely out of the question, especially after an unexpected jump in the unemployment rate. Now, according to economists such as David Rosenberg, this is an issue. All right. Powell has done a good job of tuning out the noise thus far, even as there was talk earlier this year of a Goldilocks scenario and the market was pricing in twice as many cuts as Powell projected. He was unwavering. But now it's not just the state of the economy that potentially hangs in the balance. So this is going to be a very interesting election. Here's the rest of the headlines for today. Photos show the biggest moments from the 2024 Oscars. The Trump campaign paid an expert $750,000 to find fraud in the 2020 election, only for him to dismiss their complaints in minutes. Photo agencies are refusing to publish a portrait of Kate Middleton with her children over concerns it was manipulated. Apple has made a string of video ad hires, and it points to its growing TV ad ambitions. Zuck roasts the Apple headset again. The captain and co pilot of an A320 fell asleep for 28 minutes during a flight to Jakarta, report says. Working for a billionaire hedge fund founder, Carrie Soon, who reportedly worked for Chase Coleman, wrote a memoir about her experience as a personal assistant to a top hedge fund manager. The book, which doesn't name names, details the lavish gifts, a Balenciaga bag, a complicated task, a last minute surfing trip to an exclusive beach. They were part of the gig. Frankly, who gives a darn? What's the Bitcoin halving thing all about? Well, the cryptocurrency has had a big year, hitting an all time high amid a big rally. Next up, a major event that will lower supply and potentially spike prices even more. Jamie Dimon and Ray Dalio have changed their minds about the economy. The two Wall Street titans are no longer expecting a recession, with inflation cooling and job market holding steady. It's about turn from the 2020 when both Diamond and Dalio were warning of a sharp slowdown in growth. Why was Elon Musk so obsessed with taking over OpenAI? In 2018, Tesla was struggling. During that time, Musk suggested that OpenAI raise $1 billion merge with Tesla and name him CEO. Tesla desperately needed a lifeline, and it sure seems like he saw OpenAI as a way to raise capital. Meet Boston's new power venture capitalist. Underscore VC is changing up its ranks. Lily Lyman, who proved herself a force in Boston's startup scene, has been identified as the firm's next leader. And again, why do we care? NVIDIA is expanding its VC footprint. The chip maker has invested in nearly 3 dozen startups over the past year. Analysis shared shows the deals from part of NVIDIA's strategy to strengthen its own role in the rapidly growing AI ecosystem. Lil Wayne promised a drug free workplace to get pandemic aid, a program for indie music venues, which required artists to certify they ran drug free workplaces, ended up paying millions to rich musicians. Among them was Lil Wayne, who received nearly $9 million in funding. So the question here is, why are already wealthy people receiving even more money? Pandemic aid? There are Why did they need pandemic aid? That doesn't make any sense. You're throwing people out of work. You're threatening people, telling them they better not go to work or they'll be arrested. But you can give $9 million to already multimillionaire Lil Wayne. You see the problem here, folks? The problem here is not interest rates. The problem here is not even really inflation. The problem here is corruption, and it comes from the top, from the president to the Department of Treasury to the Federal Reserve, all the way down the ranks. That's where the problem is. It's corruption. Things like this, ridiculous decisions like this. So you don't have any money for entitlements. You have no money to fund Medicare. You have no money to fund Medicaid. You have no money for fair and affordable housing. You have no money to help the homeless people living on the street. And before you even think about it, that's not what I'm talking about. I'm not talking about the people on the street who are there because of horrific decisions they made. I'm talking about the working poor. I'm talking about the families who work 3 and 4 jobs and still can't afford the rent. That's who I'm talking about. I'm not talking about the drug addicts, the zombies walking around, the alcoholics, the criminally insane. I'm not talking about those. I'm not talking about the mentally ill. I'm not talking about those. I'm talking about the working poor. When I say poor people or homeless people, I'm talking about the working poor, the families with children. All right, let's not get this twisted. You have no money to help them, but you can give Little Wayne $9 million. Like Little Wayne really needs nine million more dollars. And it's not. It didn't come from album sales. It came from our federal government pandemic aid to wealthy people. No pandemic aid to the poor, to the working poor families. No aid for them. As a matter of fact, you say that they get too much help, and you want to take away the entitlements because you're saying it's entitlements are costing too much. But you found $9 million to send to Little Wayne though. You found $4 billion to send over to Israel. You found another $9 billion to send over to Ukraine. But you can't give a working poor family $1,000 a month per child. You can't do that. Oh no, that's too much money. See where we're headed, folks? This is why the empire, formerly known as the United States of America, is in a state of complete and utter collapse. And that leads us to what dream job? Well, recent graduates are adjusting their career expectations amid signs that the job market is starting to weaken. According to labor experts, layoff announcements are fueling Gen Z and millennial workers' sense of pessimism. You see, you're creating the emo culture with your ridiculous laws and legislations and rules that are designed to hurt the poor even more. And that's another issue too. You the play on words and euphemisms. George Carlin was the first outspoken individual to talk about the problem of America and its euphemisms. If you don't know what I'm talking about, just search for it here on YouTube. I think that it's still up here on YouTube. The stand up he did when he was talking about euphemisms and the 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 dire consequences of euphemisms. Very powerful stand up, one of his best stand ups, if not probably the best stand up he ever did in his life. And he had a lot of them, a lot of good ones, but that was a very deep one. Okay. So think about it. This is where we are. In other news, millennials fall for investment scams a lot, even more than boomers. That's another thing too, and that's sad. That's not necessarily due to any fault of their own. Make no mistake, you guys, victims are not to ever be blamed. No matter how lax they may have been in their security, or how naive they may have been, or unknowing or uneducated in certain things, or just unaware. That is not your fault as a victim. If someone victimizes you, it's their fault, not your fault. The worse the economy becomes, and I need you to hear me on this, the worse the economy becomes in the United States of America, the more sophisticated and elaborate the scams will become. You need to understand that. There are some grifters amongst the United States populace that are absolutely amazing at their craft. All right. And they will join up, create gangs of grifters to pull off elaborate schemes and scams upon the unsuspecting populace. So be forewarned about that and be extra vigilant in your dealings. The Dartmouth men's basketball team's unionization efforts could change college sports forever, but it will likely be a rocky road. There are also three theories to explain Trump's TikTok flip flop. And a tech entrepreneur shared the Stoke stage stack habit creation and framework that helps him keep habits up to 365 days a year. And in today's earnings, you got Oracle and BuzzFeed among some other companies. And as far as our government reports for this week, there are a few that you need to be aware of. And that starts with tomorrow. Tomorrow, we got the Consumer Price Index, the CPI, core CPI, CPI year over year, core CPI year over year. And then on Thursday, we have U.S. retail sales, producer price index, core PPI, PPI year over year, core PPI year over year, initial jobless claims, and business inventories. And then on Friday, not to be outdone, we got the Empire State Manufacturing Survey. We got the Import Price Index, the Import Price Index minus fuel, industrial production, capacity to utilization, and of course, the big one, consumer sentiment. Yeah. So it's a big week heading into next week's FOMC. So there's a lot of information to digest. So I would encourage everyone to make sure you are on point with everything that's going on. Then I'm going to leave you with something else, and that's the plundering of America's hospitals. And that's when hospitals are sold off their land to investors. Now, I was first made aware of this back in the 1990s when in the DMV, for those that don't know, the DMV is the DC, Maryland, Virginia, that tri state area, even though DC is not a state, I know, but that's just what it's called or referred to. All right, inside the Beltway, outside the Beltway, you know what it is. Anyway, there were issues with DC hospitals. DC General was in the news a lot because it was undergoing a lot of financial trouble. And then there was, I think correct me if I'm wrong, but I think it was Southern Maryland Hospital too. Some very horrific things happened at these facilities. Now, to be fair, DC General was an amazing hospital. And the reason why I say it was an amazing hospital, despite all of its troubles, is because the best surgeons in the areas in the three surrounding jurisdictions, Maryland, DC, Virginia, were working at the DC General Emergency Room. DC General saw more gunshot victims than I think any hospital in the world. All right. There was a time starting in the late 1980s into the early 1990s where DC had the highest murder rate per capita in the nation and the highest violent crime per capita in the nation. All right. It was the wild, wild west of its time back then. Chicago and California, they had nothing on DC back in the day, even though they're bigger than DC. Chicago, California, way bigger, but they didn't have nothing on DC at the time. And this was back, when gang activity really started hitting the radar. Remember when Ice-T made his famous song and then the famous movie Colors? Well, this goes all the way back to there. This is before Boys in the Hood. This is way back then. Okay, and it was a really crazy time, and so because of this, the hospitals were just poorly managed. There was just a lot going on, and it should not be missed on the masses that this is also a time during what I call the roll up period. The roll up period, I think, officially kicked off maybe 1986. I think it was. You guys who know, if you know, you can let me know if I'm wrong, if I'm off a little bit here. But the roll up period started around 86. And one of the key events that really started to see government shakeup of industries I like to call it the Pan Am Lockerbie incident. For those that know, you were alive back then. You remember that Pan Am Lockerbie flight where the plane blew up or whatever, and it was tragic. Pan Am was getting hijacked right and left ever since like the late 1970s. Pan Am was always in the news, man, and more than Boeing is today. All right, so Boeing is the new Pan Am if you want a comparison, and it was just a big deal. And this is before, for those that don't know, this is before, credit reports, you know, before FICO scores and all that stuff. So it was just a different time period. And industries were not regulated the way they are now. Now the whole world's regulated, but there was a time when industries could pretty much do whatever they wanted to. And this was the time where uh, air flights were extremely expensive. All right. And they didn't have a lot of competition or pressure to lower these prices. This was the world we were living in. And as a result of this, hospitals too were kind of in their own world. All right. And there wasn't a whole lot of oversight and regulation like it is now. Now there's all these different rules and things of that nature. But back then, hospitals could do a lot of little sneaky things on their bills. So you could get a bill from a hospital and it would be, tens of thousands of dollars for inpatient stay. It wasn't unknown or unheard of that if you were, let's say, involved in a really horrific car accident or something, and you had to spend like 6 months in the hospital in recovery, and then from there you would leave and go to like a what do you call those? Like a rehab facility. I remember seeing bills at the time for $1 million, $2 million for just being in the hospital for 6 months. Can you imagine that? Getting a $1 to $2 million hospital bill for being in the hospital for 6 months. Yeah, that's just the hospital's charges. And the way things were designed back then, hospitals could split their stuff up. So the way it worked is if you, let's say, God forbid you're in this horrific car crash, you're all banged up, but you're alive, thank God. The helicopter airlifts you to shock trauma. They do their work on you, you're in ICU, whatever. What happens is when it all is said and done, you're going to get a bill from the hospital itself. And it could be anywhere from $1 to $2 million. Then you're going to get bills from the individual doctors and specialists that treated you as well. Then you're going to see a bill from the anesthesiologist. Then you're going to see bills from nursing. And then you're going to see bills for all the radiology and all of the tests and things of that nature. So you can see, like, you can receive like 5, 6, 7 different bills from that one hospital stay. So again, this was a time where things were like that. And there wasn't fee structures or price limits or anything like that. So hospitals could charge you whatever they wanted to. So every every medication you received, every Tylenol pill they gave you. So let's say a Tylenol pill at the store right now. Let's just say it's $1 a pill. All right, you can go to Walmart, get the generic Tylenol. It's um, it's $1 a pill. In the hospital, though, they may charge you $5 or maybe even $10 per pill. And another interesting thing too is there's this thing called bundling and unbundling. Okay. Bundling is this when you get just this one big bill, nothing's broken down, everything's bundled together. All right. Nothing's broken down. And insurance companies used to hate that, right? And they wanted to see all the charges. So what they would do is they would request for what is called an itemized bill. An itemized bill, unlike a bundled bill, is where prices are unbundled, and every charge has to be listed individually. That's what an itemized bill is. It's showing every service you received that they are charging you for. Changing gauze, a prescription, every time. I mean, every little thing. And back then, if you wanted to have a telephone in your room, there was a telephone charge for that. They charged for TV. They charged for everything. There was nothing free in the hospital, believe me. And so when they will unbundle the bills, that's when they discovered what is called today fraud. Let me explain. They found out and discovered that hospitals were billing for services not rendered. They would charge a person $10 for, let's say, a Tylenol pill. Come to find out, the patient never received any Tylenol. And you'd be like, how could they find out if the patient received the Tylenol or not? They weren't there. On the contrary, when the insurance companies request what is called an itemized bill, again, unlike a bundled bill, which is one big universal charge, an itemized bill has to list all the services received and the charges therewith. But this is how you catch fraud. The insurance company will then say, okay, we need now the nurse's notes and the doctor's notes for every day, for every service. Every time the nurse came to check on a patient, they had to write it down. Every time the nurse dispensed medication to a patient, they had to write it down. Every time the doctor came in and observed the patient, he had to write it down. All right. Every time you go to your primary care physician, doctor's notes must be attached to each office visit. And the doctor is writing down their impressions of the visit, what you talked about, possible diagnoses and prognoses, any prescriptions being dispensed, any prescriptions written, all of that is there. Now, see, in the hospital, you would think, oh, you can get slick. And yeah, they were getting slick. But remember, just because you're in the hospital, it doesn't change the way medical practice is practiced. The doctors and nurses that are treating you there, they still have to write actual prescriptions for each medication that you're going to receive in there, all the way down to the IV. There must be a prescription for every medication you receive, whether you're receiving it orally or you're receiving it intravenously. It has to be itemized. And it must be included in both the doctor's and nursing notes. The doctor in his notes has to show that he prescribed it. And then in the nurse's notes, she has to document where she actually administered it. Capiche? So that's where the fraud and stuff started to be noticed. And if you guys remember 60 Minutes back in the day in 2020, remember that with Barbara Walters when Saturday Night made fun of her and called her Baba Wawa? This is 2020. Well, they did investigative reports back then, and they found that it was a common practice in the United States for hospitals to overbill people, especially for services not rendered. All right. So it's no secret that hospitals have been in somewhat of a twilight zone paradox for decades now. Okay. So it's not unheard of when people are struggling, hospitals are struggling. But this is the kind of despicable aspect of things, is what we get into now. Because in community after community, did you know that hospitals keep closing now in 2024? We've gone from the late 1980s to the early 1990s. Now we're in 2024 and hospitals keep closing. In 2018, it was Northside Regional Medical Center in Youngstown, Ohio. In 2019, it was Ohio Valley Medical Center in Wheeling, West Virginia, along with East Ohio Regional Hospital across the river in Martins Ferry, Ohio. That November, St. Luke's Medical Center, which had treated patients in Phoenix for more than a century, shut its doors. In 2020, as the pandemic hit, it was one in Massachusetts and another in West Virginia, followed by 4 more in California, Pennsylvania, and Texas over the next 3 years. And yes, other hospitals are teetering on the brink. In 2022, Common Nason Medical Center in Pennsylvania announced it was ending OBGYN deliveries, leaving some mothers to be to travel almost an hour to give birth. Now, we call those places medically underserved areas. When specialties are no longer available or have never been available in a certain area, is considered a medically underserved area. Okay, where you live in a rural area, whatever, and you may only have X amount of different type of doctors, but you don't have certain specialties. They'll say you're in a medically underserved area. And if you had like a PPO plan or where you had to go in network, stuff like that, the hospitals will cut you slack and say we'll still treat it as if you were in network because you live in a medically underserved area. All right, so that's the background on that. Now, last year, Glenwood Regional Medical Center in Louisiana was ordered by the state to turn away patients because of inadequate supplies and staffing levels. Now, again, this goes all the way back to the 1990s. Inadequate supplies and staffing levels. All right, let me explain. When we say inadequate supply, there's always been sort of an issue, and it can vary from state to state, but there's always been issues with the business side of things. So staffing levels is something a delicate balancing act that you're always trying to deal with. It was said, I remember even back then, that there was a nursing shortage. We've been hearing nursing shortages forever, and then it got to a point in the early 2000s, right around 2000, when they started saying, okay, now it's kind of oversaturated, basically. But now here we are again after the pandemic, hearing about shortages of nurses, shortages of supply, inadequate supplies. Okay. I remember in Southern Maryland Hospital, it was on the news because they found hypodermic needles and stuff just sitting on a chair. They even found blood work just like out in the open, sitting on a chair. I mean, just crazy stuff. Insanity you would never have seen, before. And yeah, it was on that level craziness. So, in addition to their financial struggles, all the hospitals shared three things in common. They all served low income communities that suffer from a lack of access to health care. All right. They were all owned at various points by for profit investors, including leading private equity firms like Cerberus and Leonard Green and Apollo. And in a move that stripped the hospitals of one of their prime assets, the owners had sold the land beneath the facilities to a little known real estate investor called Medical Properties Trust, or MPT, which has purchased some $16 billion of hospital real estate over the past 2 decades, now bills itself as one of the world's largest owners of hospital beds. This is where the problem escalates, ladies and gentlemen. This is where it escalates. For many of the hospitals, the deals provide disastrous. Once their real estate was sold to MPT, they were forced to pay rent on what had always been their own property. That added to the massive debt burdens already placed on the hospitals by their for profit owners, deepening their financial woes. It also deprived Americans of desperately needed health care and put lives at risk, all while enriching some of the world's wealthiest investors. Again, this is where I keep going back to this. It's about corruption, folks. It's not about capitalism versus socialism. It's not about interest rates. It's not about inflation. It's about corruption. And it's everywhere. It's saturated in all industries. And it's at a point which is ridiculous. Again, allowing this to happen is criminal. And this is why you're suffering. The whole Obamacare thing was not even necessary. All you had to do was put a stop to the corruptive practices that have been allowed to happen. Because those that are in power in those municipalities, the governor, the mayor, the congressperson, the senator, the powers that be, get paid off, whether while they're still in office or promised goodies when they leave office. The point is the corruption is rampant, folks. It's the biggest scam that almost no one knows about. MPT is one of the problems. And this is happening in industry after industry. So with that being said, folks, that's our show for today. I just wanted to bring some things to your attention that it's not always what it seems to be. Things are not always what they're cracked up to be. Don't be deceived by the talking heads in the media. It's not about blue versus red. It's not about interest rates. It's not even about the inflation. It's about the corruption. If you nip the corruption in the bed in the bed, then you don't have to worry about interest rates and you won't have to worry about inflation. Because the thing that is causing interest rates to be what they are, the thing that is causing inflation to be what it is corruption. Stop the corruption, you'll stop the inflation. Stop the corruption, and the interest rates will go back to where they belong, which is down. I can't emphasize this enough. This is why your vote will count more than it ever has counted in American history this fall. And here's the sad part. I know that most people are not going to listen. They're going to vote Democrat or they're going to vote Republican because that's what you've been programmed to do as an American citizen. But what would happen if every voter in November voted independent and no Democrat or Republican incumbents remained in office? What would happen? That's the scary question you need to ask yourself. What would happen? Think about it. What would happen? Not one red or blue state got reelected. Every person on the ballot that won was an independent. No Democrat, no Republican, just an independent. What would happen? Think about it. What would happen? Because that's what's needed if you want to stop the corruption. That's what's needed if you want to stop the United States from collapsing. Anything short of that, and it's a guarantee that the country will continue collapsing until it has collapsed completely and utterly. All right? Think about it. Vote independent this November. Get every incumbent out of the office. Do not reelect any incumbents. Don't elect any Democrats or Republicans, whether they be incumbent or otherwise. Vote independent. And if there isn't an independent, when it gets to that time, pencil one in. Pencil a name. Doesn't matter. I guarantee you, you would see something quite interesting if you did that. All right, folks, that's it. Remember, the system works if you work the system. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. That means take whatever profit you can from the market without giving it all back in the form of losses. Don't turn winners into losers. And with that, I'll see you guys in the next one. I'm out. Don't forget to smash that like button and share with friends and family. You never know who may be encouraged or helped or enlightened from the info. I'll see you guys in the next one. Peace.